Listen up. If you're in crypto or you're thinking about making your first move, there's something critical you should understand about this space. Something that might be a little concerning. We've crossed several big milestones over the last little while. Bitcoin went from being a purely speculative asset to a legitimate reserve of value, a treasury asset, something worthy of holding alongside gold, government bonds, and the world's strongest currencies. And it's not just retail investors on crypto native projects saying this anymore. The biggest names in traditional finance are going all in on Bitcoin and digital assets. The same big names that at one point ignored crypto, some even called it a scam or unsafe. These aren't just average investors looking to do some trading on the side. These are financial giants that have the power to move entire markets, and they're focused on stockpiling Bitcoin. A lot of it. Do you know who the largest Bitcoin holders are right now? Well, aside from Satoshi Nakamoto, who many believe is holding about 1 million Bitcoin in total, institutions are catching up. In fact, the two largest institutional holders of Bitcoin together now hold more than Satoshi. I'm talking about BlackRock and Strategy. And if you've been paying attention to crypto news, you know these giants are still actively looking to buy more. As of today, BlackRock holds 740,000 Bitcoin, worth over $80 billion. And Strategy is not too far behind, with 630 million coins valued at just over $70 billion. And if you think about it, this magnitude of purchasing isn't easy to afford. Even the biggest companies don't have billions of dollars just lying around and available to spend the way these guys did. But these companies had a plan to make it happen. They each used a separate strategy, and I think it's worth knowing how they work. BlackRock purchases Bitcoin through their IBIT ETF. So increasing demand for this ETF from investors is what helps fuel all of their purchases, which means BlackRock doesn't really own this Bitcoin directly. It's more like a pool of Bitcoin being managed by BlackRock, with ETF shares representing a stake in the pool. On the flip side, Michael Saylor's Strategy is considered a Bitcoin treasury company. Strategy directly purchases Bitcoin and owns it. And they use various methods to raise capital for these purchases, like creating more shares of the company's stock and offering convertible debt to investors. Yes, their strategy involved taking on debt. The idea behind this is that Bitcoin's future price appreciation can cover this debt later on. That's if Bitcoin appreciates over time. So let's think about this for a second. Strategy and BlackRock together own over $150 billion of Bitcoin. They alone control 7% of the supply. Bitcoin is becoming legitimized, adopted, and in demand by powerful players in finance. These facts are considered bullish points. And this is what we wanted, right? But why does anyone get into crypto in the first place? It's to make money, obviously. It's all about the money. At the end of the day, these financial giants are just investors that are playing with much larger capital. Now, yes, Satoshi alone holds the most Bitcoin today. And aside from the first ever Bitcoin transaction to EFANI in 2009, it doesn't seem like Satoshi is looking to move money around or cash out. But can we say the same about these financial giants? Will they sell at some point? Or are they even allowed to? And now that we understand we're just smaller fish swimming in the crypto market, should we be worried? I'll talk more about this in today's video and also discuss ways to protect ourselves in case things go wrong. Now, let me quickly mention something important for those of you who are actively navigating this market for trading opportunities. If you don't already have a reliable exchange that you're happy with, then check out WEEX. Signing up with the link in the description below will get you 30% off already low trading fees. Personally, this has actually become one of my go-to tools for both spot and futures trades. It's fast, reliable, and doesn't feel clunky like some other exchanges out there. Especially for futures, the UI makes it easy to manage positions without overcomplicating the process. And if you're looking to learn about how I set up my trades or want to start trading more, then check out the Discord. We're breaking down setups, sharing strategies, and helping each other level up in real time. Whether you're just starting out or already experienced, there's something in there for you. You can find the link down below. As always, none of what I share is financial advice. Please make sure you do your own research before making any financial decisions. Now, hit those like and subscribe buttons, turn on post notifications, and let's get started. So there is no doubt that all these financial giants are starting to go all in on Bitcoin and crypto. Even the US government is pushing the digital asset agenda to new heights. We're seeing mass adoption slowly take shape in real time. But this raises a critical question. Wasn't the whole point of crypto to give individual users full control of their transactions, which meant cutting out institutions and centralized control? That was one of Satoshi Nakamoto's main goals outlined in the Bitcoin white paper. Well, with all of these major companies loading up their crypto bags, we're technically moving in the opposite direction. right? Because with so much Bitcoin falling into their control, companies like Strategy and BlackRock are becoming the major forces that control the value of this asset. And while this has helped push the value of Bitcoin and the crypto market up, do they also have the power to destroy the market? Well, let's look at BlackRock first. Their exposure to Bitcoin is through the IBIT ETF. And if you look at the performance since launching last year in January, IBIT has been a dominant force in the spot Bitcoin ETF market. Some days recorded more than $1 billion flowing in from investors. And last month was one of the best performing months with over $5 billion of inflows in total. This lines up with Bitcoin's bullish price action lately, which makes sense. But this is just looking at inflows. There's another side to the equation, outflows. When more investors decide to sell their ETF shares, every red line on this graph represents a day when more money was flowing out of this ETF. And clearly, there were periods of times with strong outflows. A lot of this happened shortly after the market started pulling back at the start of this year. And this translates to more investors feeling fear and selling off their shares. This is also the case for crypto ETFs from other big companies. So if investors decide to sell IBIT shares, what does BlackRock do with their Bitcoin holdings? Well, they would need to compensate the investor that's redeeming their shares, which means BlackRock would sell Bitcoin for cash, and at this magnitude, selling does impact the market to some degree. But just over a week ago, the SEC approved a new rule that allows in-kind redemption. This means institutions that want to redeem ETF shares can receive Bitcoin directly as compensation instead of BlackRock having to sell the Bitcoin for a cash transfer, potentially reducing selling pressure in outflow events. But this isn't the only change we saw. The SEC also increased the position limit on IBIT options by tenfold. This is a reflection of their growing confidence in the crypto ETF market, and it also opens the doors to larger institutional trades. But despite an updated ETF structure, the big concern still remains. ETF redemptions can still trigger large-scale Bitcoin movements, and this is on a level that could definitely impact retail investors. Not to mention, institutions that redeem Bitcoin directly could still sell the Bitcoin on the market themselves. Now, that's BlackRock's involvement in Bitcoin. How does Strategy fit into the picture? Unlike BlackRock, Strategy is considered a Bitcoin treasury company, which means they've been directly accumulating the asset themselves. But to afford this Bitcoin, they had to take on massive amounts of debt. Here's how this business model works in case you're not aware. Strategy raises capital by issuing convertible notes, stock, and common equity, and all raised funds get directly deployed into Bitcoin. I'm sure you've seen articles pop up about Strategy making Bitcoin purchases. Just a week ago, we saw a $2.4 billion investment from them. This was funded from an initial public offering for a preferred stock they just introduced. Basically, a new stock under this company that pays dividends to investors. And other major purchases in the past were funded through convertible notes. These are basically loans that can turn into shares. So Strategy gives out these convertible notes to investors in exchange for lending a loan, and this puts the company in debt. And lenders have the option of converting that debt into company stock. Whether it's an IPO or convertible notes, this entire business model is built on the belief that the stock will be worth more later. And for Strategy, this all depends on Bitcoin's price performance. So let's look at where they stand today. The 630,000 Bitcoin they owned was purchased in parts over the last 5 years. And the average cost on this Bitcoin is reported as roughly $70K. So this company is already profitable on their investment. And the fact that they're continuing to buy up more Bitcoin today means they truly believe Bitcoin will go even further. So let's say Bitcoin continues to climb higher and Strategy goes further into the profit zone. Is there anything stopping them from selling any of their Bitcoin to cover their initial debt? Well, not really. Strategy isn't regulated in the way an ETF is. They can actually sell Bitcoin at any point in time. Now, let's consider the scenario where Bitcoin pulls back enough to cause panic in the market and we see things start to crash. If the price goes low enough and Strategy is in trouble, they might be forced into refinancing, dilution, or selling Bitcoin. So whether Bitcoin goes up or down, they can definitely sell. Michael Saylor's narrative has always been long-term holding, but if the company is ever in trouble, nothing is stopping them from dumping Bitcoin to save themselves. So with all that in mind, what do we do as investors? Because if the biggest players in the world are here to make money, then so should we. That doesn't mean panic selling. It doesn't mean copying what institutions do either. It means having a strategy that balances risk and reward according to your own personal financial situation. For me, that means having an exit plan ready. I'm not setting unrealistic price targets or hoping to sell everything at the top. This is impossible to pull off. To me, the smarter move is to ladder out of your positions on the way up. As the market moves higher, I plan to gradually take profits at different levels, which is why I like to have limit orders in place That way, sales can get triggered on their own as the market moves up. WEEX is a great tool for setting and tracking orders, but this is basically a way to secure gains while still keeping upside exposure. So if the market decides to drop, I still walk away with something. Another good strategy is to withdraw your initial investment. This ensures you don't ever go into the negative, and the only thing as risk after this point is your profit. Whichever strategy you go with, it's important to not let the market sway your emotions too much. This could lead to FOMO buys and panic sells that burn you. Now, aside from spot trading crypto, I also started getting more heavily involved in futures trading. This helps me take advantage of short to medium term fluctuations in the market. There's a lot of discussion in the space around price manipulation, liquidation hunts, and how certain movements seem to target over leveraged positions. And while that might sound risky, I found that if you understand the patterns and use good risk management, it can actually create opportunities for longs and shorts. I've been using WEEX to test out these ideas, and it's been going pretty well so far. I'll leave the sign up link in the description if you're interested in giving it a try. And if you're curious about how crypto futures work or want to learn more about identifying and setting up trades, head over to the FireHustle Discord. We've got a full team that'll be posting strategies, guides, and tips on futures trading. So whether you're already trading or looking to get started, this is a space that can help you grow. I've personally learned a lot from this community myself. The link will be down below. So how do you feel about major institutions going deep into crypto? Do you feel more bullish about all the buys, or is this something we should be worried about? Let me know your thoughts in the comments below. And if you want me to cover a specific topic, leave your suggestions in the comments as well. I read every single comment. And as always, none of what I share is financial advice. Please do your own research and understand these projects and narratives in your own terms. Don't forget to leave a thumbs up and subscribe to the channel. Hope you guys enjoyed the video, and I'll see you in the next one.